At a conference in Brisbane over the 17th, 18th of June, I gave a presentation to an audience and said that we are looking at very much higher gold prices in the next few years and thought we'd be able to achieve a price of about $5,000 an ounce in that time period. Now, that's not such a strange number compared to where we are today, because gold prices in almost all currencies are making new all-time highs. We've certainly seen that in US dollars in the last week. We've certainly seen that in terms of euros, in British pounds, in Swiss francs. Most of the OECD currencies, the commodity currencies like the Australian dollar and the Brazilian real and one or two other commodity currencies have actually been a little different in their character, and consequently they have not yet made new all-time highs in 2010 as the OECD currencies generally have. We've got to look at that long-term issue that I mentioned, and if we think about where prices are in real terms, if the gold price peaked on the 21st of January 1980 at over $875 an ounce, and there's been a lot of cumulative inflation since that period. So in real terms, where we are today compared to that $887 intraday is only around about $550. So even though we've got a bigger number, in real terms we're still well below where we were 30 years ago. The other thing to keep in mind too is that the conditions today are far worse in terms of the background and intrinsic value of gold compared to where it was in those very strongly inflationary periods in the late 70s, early 80s. World gold production peaked in 2001. That's almost a decade ago, and the response to the higher gold price has been remarkably muted. The main reason for that is the decline in gold production from South Africa, and we've seen growth in China. China is now the world's largest producer, eclipsing Australia and the United States. Peru is becoming an important player as we go forward. But the demand for gold is rising. Investment demand is much higher. It's about 3 times the level it was even 3 years ago. And the central banks are no longer selling their gold. They realise just how important it is to their monetary structure. Consequently, the supply of gold is not increasing at all, and the demand, as we mentioned, is rising. Very strong demand still for gold coins and small ingots. Now, when we look at gold stocks, they've really underperformed over the last few months, the rise in the gold price. But the fascinating thing that I've found is that gold stocks have really gone sideways. And if we look at the US indices going back to the late 70s, gold stocks have really gone sideways for 30 years. And what we're looking to see is a breakout on to the upside, reflecting that higher gold price. But all the indicators are that gold stocks are outperforming the general market. The volumes are picking up in gold stocks against the rest of the market, and I think that we're going to see quite a substantial outperformance by the gold sector and other commodities as we go through the next couple of years. I think the experience that we saw from 2000, from the peak in the US equity market and to its 50% decline into 2003, in that period we saw gold stocks move up quite substantially, and whatever happens to the US equity market, we're going to find that these gold stocks are going to outperform. So there's many opportunities coming through now. The Australian market, whilst it's been hit with this resource rent tax issue, something which I think is quite bizarre in concept and will most definitely not be accepted by any group, any party in its current form, and will probably be just forgotten about after the next election. But the opportunities in the Australian share market are quite reasonable. Have a look at the recommendations that we have. As far as our portfolio is concerned, people must have the larger caps stocks, the Newcrests and the Lahirs, and then you must have a portfolio of 6 or 7 stocks at least. And when you get down to the smaller ones, you've got to have a good spread, because the risk in those companies is still quite great. The rewards as we go through will be substantial. Thank you.